Hims & Hers is going to be raising as much as $1 billion, and this is going to give the company a huge runway to have a lot of optionality for the business. They could go out and buy competitors, suppliers, more testing companies, more production companies, a lot of options. And then one of the things that we know that they're going to be investing a lot in is artificial intelligence. So let's dig into exactly what we learned this week, even after their earnings report. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. Thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's go through the biggest thing that came out after the market closed on Thursday. That is this upsized $470 million convertible notes offering. What they said they're going to use this for is to accelerate global expansion and utilization of AI in healthcare. So that's kind of what's on the tin. That's what they say that they're going to do, but no definitive agreements for acquiring another company or something like that. Let's go through a few of these details, then I'm going to tie this into a recent hire, CTO Mo El-Shanawi, if I am saying that correctly. But what they're going to be selling is $870 million in 0% convertible notes. These mature on May 15th, 2030, so about 5 years from now. And there is a 0% coupon rate. What that means is there's no interest payments that Hims & Hers is going to be paying for this debt through the maturity of the debt. The upside that investors get, if you are an investor who is offering this debt to Hims & Hers, is it is convertible to stock at a conversion rate of 14.1493 shares per $1,000. Bonds are priced per $1,000 per unit. So that's a price of $70.67. So if you're bullish on Hims & Hers, one of the ways to take a little bit less risk than just buying the stock is say, you know what, I want to invest in this convertible debt offering. I get my $1,000 back if the company doesn't go up in value a whole bunch. But if the stock does go up and goes up to, let's say, $100 or $200 per share, I get to convert my $1,000 at $70.67 per share and then take the cash on top of that, or the gains on top of that. I want to go through some of these other details, but let's pull in this other hire that came in before the market opened yesterday, because this ties into this debt offering. El-Shanawi brings over 2 decades of experience and actually came from Cruise. He was a CTO at Cruise. This was something that Andrew Dudum talked about, I believe it was on Twitter, where he said, you know what, I've actually been looking at people in the autonomous driving business, because that's a business where you can't fail. Safety is paramount in that business. So if you have the mindset to run artificial intelligence for a business where safety is paramount, that would translate well to healthcare. That was kind of the thinking behind hiring somebody like El-Shanawi. And they gave some indications of where we're going to likely see more artificial intelligence by delivering a seamless and smarter end-to-end experience from intake to diagnostics to treatment and beyond. And I think this is the piece that I'm going to be focusing on when you look at what happens with Hims & Hers over the next few years, is elevating health and wellness experiences. We want to see Hims & Hers become a modern healthcare platform powered by AI and direct-to-consumer infrastructure. So what are the kind of things that we're going to see? I think this is sort of an idea right here. This is their weight loss offering. They obviously have the partnership with Novo Nordisk to bring Wegovy in. You have liraglutide, their oral solutions, and then obviously personalized semaglutide. These are the products that get attention. But what may actually add more value is all of these other things. So if I go to Hims & Hers and I say, you know what, I want to lose a little bit of weight, they could bring not only a prescription to the table, but also, what's your workout plan that goes with that? What's your nutrition plan? How are we going to track your progress? How are we going to support you in that journey? These are all things that would make a lot of sense with artificial intelligence, because it allows you to personalize much more effectively. So I think that's really the way to think about both this hire and this massive capital raise. Now, we don't know a lot about what they're going to be building, especially in artificial intelligence, but think about how AI in healthcare and for Hims & Hers is going to be different than AI for something like ChatGPT. They're not going to just be able to put your personalized information into ChatGPT and then run that on their servers. They may actually have to build these servers themselves to be HIPAA compliant. So again, we don't know a lot of these details, but I think that's probably a piece of it. That's probably why this kind of capital is involved. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The other thing I want to add here is this is actually an upsizing from initially announced $450 million. That release came out before the market opened on Thursday. So a huge upsizing. That tells you there's a ton of demand. And the other thing that tells you there's a lot of demand is this 0% convertible note rate. So a lot of bullishness from debt investors for hims and hers. There's also another $130 million that could be bought. That's the typical over allotment. That's what gets you. You add these two together, you get to $1 billion that they could potentially be raising. The net proceeds in that case would be about $968.8 million. And then they have this capped call transaction. $41.6 million is going to be the cost for that. That would cap the dilution at $89.95 per share. So kind of eliminates a little bit of that dilution pressure that you would potentially have if hims and hers stock goes up a whole bunch, and then those debt holders are converting their debt into stock. So final thing here, I think the global expansion is going to be something I'm going to be watching. Do they buy competitors? Do they just invest a whole bunch of money to expand globally? They have started to do that just a little bit, but there's a lot of opportunity to leverage all the technology that they've built in the US and then move that all around the world. And they could plug in lots of different suppliers. So a great opportunity there. The other thing is that a lot of this is going to be supporting the technology team led by El Shwani. And they talk about the company's data pipeline, develop AI tools, and advance personalized treatments to enhance on consumer health, the consumer health experience. So again, it certainly seems like artificial intelligence is going to be a big piece of this. Now, the other thing that I think is interesting here is that hims and hers doesn't really need the cash to make small acquisitions, but if they're going really big, if they want to continue to grow at the rate that they have over the past couple of years, that's where you're going to maybe need some more capital. And the way to think about this is that they're trying to be an aggregator in healthcare. So they're trying to pull all of the demand together, because if you pull all that demand together, if you become the Netflix of healthcare, suddenly you're an extremely valuable business. And then those suppliers, the Novo Nordisks, the Eli Lillys of the world, they need to work with you to reach customers. That's why being an aggregator is such a powerful position. The challenge is, you've got to spend a bunch of money and you've got to grow really quickly to get there before anyone else does. This is why Uber spent so much money, billions and billions of dollars, scaling their business before anybody else could get there. That's why they're the biggest business in ride sharing today. Hims and Hers sees this similar type opportunity. So they need to expand not only in the US, but internationally. They need to build out the capabilities. They need to build out AI. They got to do all of these things at once if they want to have a multi-$100 billion opportunity. And I think that is the opportunity for hims and hers. That's why this is such a big capital raise. That's why I think this is really notable for investors. This makes the upside even bigger. So I love the move from hims and hers, and it'll be really exciting to see what they do over the next few years. Let me know what you think about this move in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.